Hello and Happy New Year. Today is Tuesday. It is Tuesday, right? Yeah. January 1st, 2019, and we're taking a look at the S&P 500 as we get ready to open futures in about another hour and start trading the first day of 2019. So this is the 5-minute S&P 500 chart, and um, focusing right here on the end of the day on Monday, on the 31st. We saw a pretty big buy program in a single candle here into the close. This is a 5-minute chart giving us a close at 2506.85. And as you can see, starting all the way back from the end of the day on Thursday, we have been, well, actually, this was the open on Friday, I should say. Friday the 28th, we've been fighting against this 2506 to 2508 or so level. Resistance. We did take a peek over it late in the day on that very end of the day rally on Friday to a bounce high so far at 2520, and then on yesterday Monday, the 31st, we really couldn't make much room once again over this 2506 to 2508 level. But then there was a buy program in the final minutes that took us right up to close the year out at 2506.85. So this is clearly a developing edge here. And if I back out the 5-minute chart just a little bit more, you can see that this extends all the way back here to December 19th, where we came down in this sell program during the Fed press conference after Fed statement came out, and we tried to sort of scramble and hold on to the 2500 handle, but we wound up breaking that and sinking even lower the next day, and then we came back up to it here on the 21st, 2 Fridays ago, and tried to break out of it. So it's been this is how things develop and become a quote-unquote edge level. It's a level where we find support, then we lose it as support, and it becomes resistance. Another word for it would be a support/resistance level, but it really is a great word for it is an edge level, because you can watch it intraday and you can make a call to go long or short based on watching intraday candle closes above or below the level. So it really is like an edge, a line in the sand sort of level. Anyway, so that's this 2506.85. If futures gap up open over this and run, then you know that this buy program at the end of the day was a setup to get people long, and they're looking for higher. If we open right on it and begin to fade off of it, then you know that this was probably players selling short calls once again into the close. A lot of times what we've seen lately on these powerful buy programs right into the end of the day is that these options players step in there and they'll sell short calls, right at the money there. They'll sell short like 2505, and get a really great credit for it. And then they'll come in the next day and they'll make damn sure that we never see the light of day above that level by going into ES and selling it. So this 2506 area, this edge is up to 2508. It really plays out even clearer on ES as 2508. But then again, there is a spread between S&P 500 and ES, and sometimes it runs as deep as about 2 points. Sometimes it becomes as shallow as only like a quarter of a point. But you always have the S&P 500 until that changes, trading about, on average, about a half a point to a point below what you're seeing on ES. Anyway, we have the falling 10-day simple moving average to contend with. On Friday, that's really what tested and held. I'm sorry, I keep calling Monday Friday, December 31st. That kept sort of holding the low of the day. It was kind of a combination of the close on Friday of 24.85 on down to where the 10-day simple moving average was. That was at about 24.82 or so on Monday on the 31st, and it's sinking a little more. This is where it closed at 24.78, but it's going to sink down here to maybe 24.72, 24.70 on the open tomorrow morning. So if we're going to test lower, you got to be looking out for where that sort of floating 10-day simple moving average is, because that's what's going to get tested. And if that doesn't hold, this whole area from last Friday's low to the 10-day simple moving average is going to be key support. And if that goes, I really think that the target is 24.33 to 24.34. That is the halfway back point between the low that we have put in for 2018 at 23.46 on up to this bounce high that we've made so far. The halfway back point is 24.33.73. So if we cannot hold the 10-day and this 24.72 level, then we're going here. And if this doesn't hold, then we're going to test the 2400 handle. I have this 2407 level marked off. That is the halfway back of Wednesday the 26th. That's the day we put in this low. It was a huge range day. Here was our low and here was our high for that day, and the halfway back point on the day was 2407. So if this halfway back doesn't hold, then they're going to test this halfway back, and if that doesn't hold, I think we're back testing this downtrend. And the longer it takes to back test this downtrend, the worse the damage is going to be. Okay, so that would be the downside. On the upside, we're looking at a breakout over 25.20. If we can open and move on over this 25.20 level, then that sort of negates this halfway back of 24.33 because we'll have a new bounce high. Then support will move up, and that's sort of the phenomenon that I look for to try and judge where is the target, where is the next halfway back point going to be put. Is it going to be put here at this 25.06 level that we fought so hard against? And if that's the case, what we would do is we'd measure the move. How many points did it take to get from this low to that 25.06 to 25.08 area? And if we double that up, that could be the eventual target that we're gravitating towards. We figure what that target is, and we compare it to levels that we already have on one of the charts, see if they match up. Maybe they line up with a simple moving average or a gap or something, and it just sort of helps you to understand how these algos and these programs are written and how they work. Okay, so that's the intraday chart and the targets as we move into tomorrow. Really the same stuff that we were using on Monday the 31st. I'm going to talk about some more longer term stuff now, so if you're not really interested in that, if you want to stop the video here, you go ahead and maybe come back to see this stuff later if you're not really interested in the longer term stuff. But when we look at the roadmap chart here, the daily chart, we really see that we have these falling simple moving averages, and we've finally put in 2 closes in a row above the 10-day. That was, kind of key. Well, actually, we didn't quite put one in on Friday the 28th, but we definitely put one in fully on Monday the 31st. And not only that, but we printed an entire full body candle above the 10-day simple moving average. So the next logical place that we probably are going to be gravitating to would be the 20-day. And if the 20-day is taken out, then we're looking to the 10-day. On the way getting up there, we have this gap from December 13th. And also what's figuring in here quite a bit is this day here, levels that we traded on this day with the little white arrow on it. That's the Fed day. And when you look at the roadmap chart, I always put an arrow on non-farm payroll day, on Fed minutes, and on Fed meeting, Fed statement day. That way I can reference them back pretty easily because those are always market moving days until they're not anymore. But for now, those are tremendously big market moving days. And we find that those intraday levels that we use on those days, we come back and visit again later. So the really most important thing to be watching on this roadmap chart right now every day would be to look at your simple moving averages and make sure you know where those are at. They are sinking big time. Every day they're going to be lower than what you saw at the close the night before. So you need to know where those are at, because then if we're trading above them and we come back down, you want to know where support might come in. And if we start rallying, you want to know where the moving target is up above. So we have straight line levels, and then we have these simple moving average levels that sort of cut through them on an angle. And right now they're all pointed down, so they're always like sinking, and the bar keeps getting lower and lower each day. But at the same time, once we move above them, until these flatten out and start to curve up, then the support keeps getting lower and lower as well. Okay, so that's the roadmap chart and talking about the simple moving averages, and then moving to the gap map chart, which is basically the exact same thing as the roadmap, but it takes away all the extraneous notes and really just focuses on the gaps and the most important levels right before us in the moment. I also try and throw a measured move target on here, just to try and give us something to wrap our arms around. I talked briefly about a measured move target on the intraday chart. Let's go ahead and draw that right now here and see what it would be, what it would look like. So say to the 2018 close, from the 2018 low to the 2018 close, what would that give us? If we put some boxes around it and line it up here, that would get us a shot just over the 50-day simple moving average. That level would be 2667 that would take us up to. And if we go back to this roadmap chart and look at 2667, I don't really have anything in here. It's basically just an open hole in here, from 2650 all the way to the 2017 close at 2673. So it would be somewhere in this area right here that we would be targeting if there is a measured move in the making, doubling this from this low to where we closed out the year 2018, and because that closeout was on a level of heavy support resistance. And here on a daily chart, you can go back and see it. I kind of pointed it out on the 5-minute chart, but here on the daily chart, you can see here was our close on the 31st. We tried trading over it and failed on the 28th. We came up here and made a high against it on the 21st, the Friday before, and failed. The day before that, we failed. And the day before that, we closed right on it. So it's been visited many times. And so that's how a level like that becomes an edge and becomes a key level that once we conquer it, maybe it's become such a resistance point because there are a lot of people that aren't committing money above that level. And once they do commit money above that level, they want what this person who bought the low down here got. And that's how we end up with these double up moves. And the same thing is true of the double down moves. People aren't willing to commit any lower, to buy any more puts. They support a low and they support it and they support it until they don't support it anymore. And then the move just doubles down from there. Just the same way it can double up from a resistance point, it can double down from support. So in speaking of that doubling down from support thing, let's get rid of this measured move here. Okay, and let's talk about this measured move that I put on here quite a while back. This is just my opinion and something to shoot at if we do get into a situation where we're going to make our next low down. If we take the move for December from the high that was made right on the first opening day, this was the day after the G20 meeting, we made it to 2800 handle and rolled over from there. And then we traded down to here to this point on the 20th of December where we finally opened below 2500. 2500 was key because that had been our February 2018 low. It had been our low for the year until these 3 days in here where we began making little bitty lows below it. And then finally we made a huge break of that level on the 19th. This is our Fed day. This is our day that we had the huge sell-off on the Fed. And then the next day we finally opened below 2500. We opened on 2496.77. So I made a measured move from the December high to that focal point there, that first opened below 2500, and I doubled the move down. And when we double this move down, we would get down here to fill in this gap around 21. This is a gap, 2191.95, and that's what this note is over here. Times 2 down, the December high to the first open below 2500 on 12/20, and that would get us down here to right into this area around 2191.95 to fill in this gap in here, or maybe even a little lower than that. And you know that overall I keep trying to shepherd us to this idea that we are going to give back the entire Trump rally, and that means we are going to trade back to 2125, if not a little lower, to 2085, which is a gap that comes in a little bit below there. Let's see if I can show it to you right now real quick. So while 2125 is the post-election low, but there is a gap on this chart a little lower than that. There we go. 2085.18. That is it's a pretty big unfilled gap from November 4th of 2016. Okay, so this measured move would get us down there. Okay, and if this measured move isn't enough to feed the beast, then I think we would be heading even lower and finally, um, you know, commit to this idea that we're 100% giving back all of the gains that we've made since the election in 2016. Okay, so hopefully I've given you a good roundabout bit of information, some stuff to trade around here. If we're going to make this move up first towards the 50-day simple moving average, maybe fill this gap in and go for that double up move up to 2667 and then roll over from there and make this trip down 500 points down to the 2100s. That certainly would be an incredibly great short. And that's why now that we're getting into the beginning of the year, we should probably start trying to look out at monthly expiration puts, especially as we move up higher and higher. Start looking out a month ahead and buying up, buying up to that $8 price window, even that $11 price window. You don't have to buy a lot of them. You could buy even just one of them and just put them away. And I really do think that even if we do trade higher, we are going to hit a ceiling at some point here, maybe around the 50-day simple moving average. Maybe we take a peek above it, but we are going to roll over, and I do think that we'll at least make this measured move back down. And if we need lower, then we're going to go to 21.25, if not 20.85. Okay, enjoy the rest of your New Year's Day, and I will see you tomorrow morning.